Good evening. So finally the trouble-filled year has come to an end, much to the delight of the bulls, who hardly had anything to cheer about. The bears managed to keep an upper hand for the most part of the year as the government faltered in the face of a series of scandals. An extremely hawkish RBI and worsening credit crisis in Eurozone added to the centre's issue. Finally, whatever little courage it shows was undone by demanding ally and adamant opposition. The upcoming assembly elections, especially in Uttar Pradesh, will be a big test for the Congress. The union budget will show if the government is still serious about reforms. Till then, the markets will continue to witness topsy-turvy movements, possibly exacerbated by uncertainty over the Eurozone debt situation. Coming back to today's market action, all was well till mid-afternoon when suddenly the main indices started losing altitude. The last 2 hours saw a vicious slide with the BSE Sensex and the NSE Nifty hitting the day's low towards the close of trade. The single biggest factor weighing on the Sensex and the Nifty today was continued weakness in the index bellwether Reliance Industries Limited. The stock fell to a new 52-week low of Rs 690 due to high volumes versus its weekly high of Rs 768. Reliance Industries also lost its coveted position as the top stock by the market value. IT titan TCS became the number one company in terms of market capitalization. The market cap of TCS stood at Rs 2.27 trillion compared with Reliance Industries' market cap of Rs 2.26 trillion. The Sensex lost 89 points to close at 15,454 and the NSE Nifty lost 22 points to close at 4,624. The market breadth was slightly negative. The BSE Small Cap Index gained 0.1% while the BSE Mid Cap Index rose by 0.3%. For the year, the Sensex and Nifty was down by approximately 25%, among the worst performers in Asia Pacific as well as world. The BSE Small Cap Index lost 40% and the BSE Mid Cap Index dropped by approximately 30%. In terms of sectors, Oil and Gas Index was top loser, down by 1.5%. The BSE Realty Index was down over by 1% as well. Banking and metals shared approximately 0.7% each. Auto, FMCG, power and capital good indices were down marginally. The PSU index gained almost 1%. Pharma, tech and IT indices rose by approximately 4.4% each. Meanwhile, the India VIX on the NSE was up by 1.8% at 27.11 after touching a day's high of 27.79 and day's low of 26.25. It had closed yesterday at 26.62. Healthy global cues had helped the main Indian stock indices stay positive till mid-afternoon. However, the early morning gains could not be sustained throughout the day as most of the headwinds that weighed on the market in 2011 have not been dealt with completely. Investors will continue to be cautious in the early part of 2012. The hope is that New Year will be better, especially in the latter half. For now, though, one can only indulge in conjecture about the first half. The outcome of state elections in Uttar Pradesh could have a significant bearing on policy formulations by UPA too, including the union budget. It might also change some political and strategic equations at the center. So all eyes will be fixed on the UP elections in the days and weeks to come. Talking of elections, USA, the world's largest economy, will also hold presidential elections later in 2012. A leadership change is also in the offing in China. Elections are scheduled in Russia, Iran, Egypt, France, Greece and South Korea among others. FNO expiry has seen traders rolling over short position, leaving chance for a short covering led bounce. Corporate results, IIP, inflation and RBI policy action will be among the important events that will underpin the market's direction next month. Thank you. Wish you have a great evening ahead and wish you a very happy New Year.